Hi, my name's Tom Blake. I am a certified residential specialist with RE/MAX Liberty, and I am here with...
My name is Brieanna Kelley. I am the branch manager at AnnieMac Mortgage in Leominster, Mass.
And recently we did a video on MassHousing and the down payment assistance, and that program's kind of a complicated program, but we've had some great questions about it. And there's also some updates to that program.
Yes.
So Brieanna wanted to make sure to bring those updates to you. So without further ado, go ahead.
All right, excellent. So MassHousing came up with some changes a few weeks ago, and they actually eliminated a program that has actually made it a little bit more complicated, and they kind of simplified it. So now they have their programs that are at 80% of area and median income, and 135% of area and median income. And in Worcester County, 135% is $165,000, which brought it up who else can use the down payment assistance, which is a big deal. So what that means is, so the old program, there was a few towns, if you made over a certain dollar amount, only Fitchburg, Leominster, and Worcester in our immediate area that you could actually use the down payment assistance program. They've now eliminated that. Well, they've actually brought in, we don't say eliminated, they brought in what they would allow you to do. So now you have more people that could use $25,000. If you're at 80% of that income, it's like $90,000. If you're at 80%, you'd be able to go 25,000, 2% for 15 years. If you're over that, it's 25,000 at 15 years at 3%, which there really isn't much difference in the payment. But for some people, that really allows more people to be able to use that down payment assistance. So it's a higher interest rate if you're over the 80%.
And that's up to the 135%?
Correct.
Is that what it is?
Yeah.
So, okay, so that's a really, really big deal. So the last time we talked, what was it? So what's the difference, right? So the last time we talked, we were talking about a soft second, right? So in order to...
Well, a soft second only in one of the programs.
Okay, and that program was only available to people who are at what percent of?
60% of AMI.
60%, okay.
Very few people qualify for that program in this market. So.
Okay, so AMI meaning area median income. So whatever the median income is, what? So I guess if 165. Well, I'm not going to do that.
So you're going to probably, like, if you're in it, they would do it by household, and it's household income. So everybody in your house that's making income that's over the age of 18 years old, you would have to use that income. So if you're in a situation where there's a two-person household, and I believe the income in a chunk of Worcester County might have been like between $55,000 and $60,000, making that income and what the purchase prices are right now, typically you're not able to purchase much of a property. So that program, although fantastic, is very income restrictive in that purchase price. Now, if you're in a, if you have a larger family and the median income is higher in that situation, that's the one that comes with the soft second, which means it's a second mortgage that has no payment, 0% interest. It's due when you refinance or sell the house, but it's a payment that you don't have to make.
Okay.
So that's the one program.
Okay.
Well, that's one of the programs.
But you have to be at 60% of area median income and probably in a specific area to do it as well?
It's actually in all of Massachusetts.
Oh, that's in all of Massachusetts.
Yeah.
Okay.
Yeah.
Okay.
So then what they did was they used to have a program that allowed you to go to the 100% of the income, and it really puts you in a situation where, and you could use a down payment assistance in all of the cities and towns in the state.
Okay.
But it was income restricted. If you went up to 135% of the median income, which is what you need to kind of, in certain price points, qualify for and need that income in your application, it was only restricted to what's called their gateway cities, which was Fitchburg, Leominster, and Worcester in this area. Okay. Yeah. Got it. So now they've opened it up. In that old program, they also had a purchase price limit, so you could only purchase up to a certain dollar amount, which in my opinion was lower than what a decent house was going for in some places, so that was hard. Yeah.
Which was what, out of curiosity?
I can't remember what the final amount was, but we were talking like, it was actually thinking at finally going up to $500,000. That was a very recent change, because for a while it was like $330,000. Yeah,
$330,000, you can't, it's very difficult to buy a house that's under $400,000 in Massachusetts.
And they had raised it, but then it was still not enough. So what they did was, let's simplify it. Let's make it 80% area median income. You get the discounted private mortgage insurance if you don't have 20% down. And then the other program is you get the normal private mortgage insurance, but you are allowed to use the down payment assistance. So they are trying to broaden the amount of people that can utilize that product.
Yeah, boy, that's a big deal.
It is. And listen, and there might be a situation where that extra $25,000, maybe you find a house that needs a little bit extra love in it, and you can keep some of that money in your pocket, or use it for closing costs and prepaid, so you're not asking the seller for that, because in this market that's very, very difficult to even ask.
Yeah, that's hugely difficult. You're just not gonna, your offer's just not gonna be accepted.
So just to be aware though, like, you have to be a first-time home buyer. You can't own any other property. You can't be in the deed of another property. You have to be a first-time home buyer. But in this particular area, that really is broadening up who's eligible for that program. And I've actually gone back through my pre-approvals. I was like, hey, you know, and some of them, they may not need it. But here's another thing that it could help you with. Private mortgage insurance is broken out by increments of down payment. 3% down, 5% down, 10% down, 15% down. And maybe you're really, really close on that cusp of being able to put 5% down, which would lower your private mortgage insurance. So utilizing that might actually give you lower private mortgage insurance.
And a lower, sorry, go ahead.
Yep. So the lower PMI would be you have the payment, so you're going to have a payment for the private mortgage. I mean, not the private mortgage insurance. The second mortgage that we're talking about, the $25,000. But paying $25,000 at 3% is way less than paying what the, you know, even if the mortgage rates are in the mid to, you know, high sixes right now, that rate is still better. Yeah,
you're saving 3% right off the top. At least 3% actually right off the top. Boy, that's a really awesome program. So and how did, just for fun, how do you determine area median income? Is it by town? Is it by county?
It's by county.
Oh, it's by county.
It's by county. So well, area median income is actually broken out by town. It is.
Which would make sense.
In the bigger scope. However, the way that MassHousing has done it, they've actually lumped it all together by county in almost all of their programs, except for that Workforce Advantage program I was talking about with the low income limits. That one is much more restricted to town. So, but you can go on their website and you can look it up. You can call me and we can run income. Now, this is compliance income. This is another thing that's very important.
Okay, explain to me compliance income.
Compliance income and what we can use to underwrite your file are two different things. So if you're on an upward trajectory to make income, they typically will use the higher income for your compliance income of what MassHousing will utilize for the income.
So upward trajectory, meaning?
Big bonuses, you got a big pay raise.
Okay. Oh, I got you. Okay.
Income, when we qualify you, sometimes is averaged because they need to, you know, if you're an hourly employee and your hours fluctuate, for example, they're going to average that income. So that's going to usually use a lower income. Or if you had a bonus and it's your first year getting that bonus, you typically need 2 years of bonus to be able to use that. MassHousing goes, that's nice. The likelihood is you're probably going to get it again. They will make sure that they're going to utilize that compliance, the bonus in the compliance income.
Interesting. So where it won't necessarily give you the opportunity to use it to qualify for a mortgage, it will definitely ding you against getting the soft, or not the soft second, excuse me,
the second mortgage,
the second mortgage.
Down payment assistance, or MassHousing in general.
Okay.
But here's my thing. You need to make sure that you are working with a loan officer that understands the difference between compliance income and qualifying income. That is a huge, huge difference. And it is something that I've seen time and time again. Borrowers think they're getting something. I look at the application and I'm like, ooh, you are literally $20,000 over what that compliance income is. And like, what are you talking about? Now, one of the other things with MassHousing, though, is they do allow for, say that you're both making really, really good money. There's two of you on the application, and you do qualify with only one of you on the application, and it keeps you under that compliance income. You technically could do the application in your name alone.
Okay.
The caveat to that is you cannot, that only that person on the mortgage note can be on the deed.
Yeah, that makes sense. Is there a time limit for that too, or is that for the life of the loan?
For the life of the loan.
Okay. All right. Well, you know.
And they audit it, just to let you know. They do. I've heard them go back and be like, you added so and so onto the deed. That's a no-go. You have to go back and actually record, have that person removed.
No kidding.
There are other ways to go around getting that done, by the way. You could always do talk to an estate attorney and deal with that separately. But but just make sure that you have someone that really understands the ins and outs of MassHousing, because there's about a couple of other quirky things that they look at in your pay stub. Reimburse expenses, things like that.
So it's not a free lunch.
No.
So no, that's huge. I mean, so as long as you dot all your I's and cross all your T's and make sure that you play in the ball field, you can potentially qualify for either a $30,000 soft second if you're in the right place.
Yep.
Or $25,000 at a very, like, half the interest rate, or a third of the interest rate that currently people are paying. So that's really a big deal.
And listen, it might not be the best product for you, because maybe you are in a situation where you can utilize one of the other, Home Ready, Home Possible products that are Fannie and Freddie, normal, financing. All of these loans are typically conventional, by the way.
Okay.
And real quick, I'll touch on the FHA piece of that. But
yeah.
that is a
Go ahead.
situation where you want to make sure that, it may not be the best product for you, and that's okay. But it's nice to have that as a tool in your back pocket if it is something that you could take advantage of. Now, the other thing that MassHousing did is they also expanded the FHA offerings, because they do offer FHA with the down payment assistance. So it's very similar, under 80%, or 80% and under, and over 80%. So same exact situation. They've expanded that product as well. Still restricted by FHA.
Guidelines?
So
okay.
FHA still has certain max loan limits that you're allowed to have. So you are restricted by that. But in a situation where you could be... I think they've expanded to allow more people to utilize the program. So I'm actually pretty excited about the changes.
No kidding. All right. So and I'm actually surprised to hear that MassHousing, I didn't realize that they offered FHA loans as well. Yeah. Okay. Do they offer VA loans too?
They do not.
They do not.
However, if you are a first-time home buyer and you are a veteran, there's a $2,500 lender credit that they give on behalf. If you are,
cool.
Again, if you're in a situation where maybe the VA loan isn't your best option, in MassHousing is a good option for you. You can take advantage of that credit, and we've utilized that program quite a few times over the years.
And this is why you want to have somebody who really understands mortgages, because it's very complicated. But there's so many good things out there for you to take advantage of. But you got to play by the rules. You got to do it right, and you don't want to have any surprises between purchase and sale and closing. So you want to make sure that is truly something that you can utilize. So again, you want to talk to an expert like Brieanna Kelley.
Yeah.
At AnnieMac Mortgage.
Yep.
At 28 Central Street in Leominster.
He can do my closeout for me.
No.
He knows all my information now. Just probably not my cell phone number, because it's not like,
I don't know that.
30 years ago, everybody's numbers memorized, right?
I now just touched Brie, so it's
yeah, that's right. Then I'm there. Okay. So if you do have additional questions, please reach out. It's really important that you understand the programs. And again, not every program fits every person, and that's really important. So
yes. And if you want to go looking for some houses, or you're looking to sell your house, talk to me, 508-951-2803. My name's Tom Blake, and I'm a certified residential specialist with RE/MAX Liberty.
And I'm Brieanna Kelley, AnnieMac Mortgage, 978-852-6376.
Have a nice night.
Thank you.
Bye.